Hi, everybody. This is Rick Martin from Fortress Federation. Thanks for coming. I don't want to steal any thunder from the presentation, but before we get started, I do want to give my biggest takeaway, and that is this property is only 15 minutes from our other property in the Bradenton-Sarasota market. That is the Oakwood Apartments, and it is currently outperforming projections by 19.1%. We are already exceeding our pro forma rent projections by $150. And these averages are actually rising. So now leasings are actually landing higher pretty much every day. Given the strong demand and the lack of supply in the market, combined with the consistency of the same team, meaning the same asset management team and property management, we're expecting similar results on this property, the Bradenton Reserve. One side note, cash flow has been so strong, we delivered distributions to our investors a whole quarter early. And then one final thing I would just say is if you check on the fundamentals of this market, you'll see they're strong across the board with high population growth, strong job growth, and rising property values. And it's a very limited amount of supply. And with that, we'll start into the presentation.
All right. Well, thanks everyone for joining. Again, this is Mark Kenyon. We're going to go through Bradenton Reserve Apartments. It's 166 units, 86 construction. It's a B asset class with an A- location. We're going to go through a lot of detail on this as well. So just a quick disclaimer, we're presenting information we've gathered through our due diligence. You're encouraged to also do your own due diligence. This is not an offering, meaning we're going to provide the investor documents like the private placement memorandum, subscription agreement. This is actually a presentation to go through that. And then you can also follow up with your CPAs, financial advisors, whoever else you need to before you feel comfortable moving forward with the project. Just kind of an overview of the property. It's 166 stores, built in 86, I mentioned. It's submarket wise, it's in Northport, Sarasota, Bradenton MSA. It's about 15 minutes away from another property we closed on about 4 months ago. And we're going to go through that as far as how we've been performing there. We're well above our projections there already into the project, which is great. There's a huge growing demand there. There's a lot of inbound migration. A lot of people probably know that from the Northeast and other areas kind of moving to the Florida area. There's a housing shortage, which again is very attractive for us as far as multifamily owners. It's located in a high performing submarket, backs up to the IMG Sports Academy golf course, which is a premium sports academy in the U.S. and is world-renowned feeder school for Olympics and many top-tier collegiate sports programs as well. Within the 1 mile radius, the medium income is $52,000. Unemployment rate's very attractive there at 4.2%. We have more stats on that we'll go through. And then the market vacancy rate is 2.5% for that submarket, which is very, very attractive.
So the investment summary, we'll take a little deeper look into the numbers later on this, but it's just a hair under 9% cash on cash return with a 1.98 equity multiple based on a 5-year hold. And that comes out to an average annual return of 19.7%. We are paying an 8% preferred return to investors, and after that it is a 70-30 split. For those that don't know, preferred return means that you, the investor, will get the first 8% before the managers receive any distributions. Other things of note, we have under market rents by well over $100, and we have some stats on that later based on some comps. It's an outstanding location, and the submarket is phenomenal. It has over 18% year-over-year effective rent growth, which is outstanding. Demand far outweighs supply in the market by a wide margin, and we'll again go into detail on this later in the presentation. This market has not only performed well, but it performed well during COVID. This projects to have some significant tax benefits via cost segregation and bonus depreciation. And we'll talk more about that later as well.
Again, this is Mark Kenny speaking. A little bit of background about myself. I've been buying real estate for over 25 years. I was a CPA, did IT consulting, for large organizations. Continue to buy kind of smaller multifamily, just myself. And then in 2013, started looking at syndications, done over 10,000 units since that time. And we're in 9 states right now.
Hello. For those who don't know me, my name is Ryan Webster. I'm a real estate professional and entrepreneur, the founder of Equity Yield Group, and a National Home Builders Association award-winning home builder. Prior to multifamily investment, I owned and operated a construction development company here in the Midwest. A wide range of project experience from value-add multifamily, ground-up single-family, and commercial remodel and development. I live in Cedar Rapids, Iowa with my family. I have a 5-year-old son and another one on the way.
Thanks. My name's Warren Dresner. I've got a background in finance and insurance in the US, UK, and Australia. I'm originally from Australia, but I now live in Miami, Florida. I've been investing in real estate since 2010 and currently own around 2,000 multifamily units across the Southeast and the Midwest. I'm a managing partner of Equity Yield Group, and together with Ryan, this will be our 3rd deal that we are purchasing together.
Hi, this is Rick Martin, and I'm the principal of Fortress Federation Investments. My real estate holdings have taken me down the West Coast and into the Midwest before focusing on large multifamily back in 2017. Since then, our focus has been in the Southeast and Texas, as we have been following the migration trends to those regions. Prior to syndication, I led a career in entertainment advertising, and I've parlayed some of those skills to help educate our investors. Thanks.
ResProp Property Management will be handling the day-to-day operations of the property as our third-party property manager. ResProp is an experienced management firm with over $1 billion in assets under management, over 5,000 units. ResProp has a proven track record of success and has operational centers in Florida. They're familiar with the market and operate other properties nearby, including Oakwood Apartments, which was acquired by Equity Yield and Think back in March. As some of you may remember, Oakwood Apartments is a 148-unit multifamily community in Sarasota, Florida. Oakwood is located 15 minutes away from Bradenton Reserve. Prior to closing on Oakwood, we did a lot of research into the Sarasota-Bradenton MSA. What we discovered is that demand for housing in the area, driven by strong population growth, is far outpacing the limited supply and scheduled deliveries of new product. Oakwood, only 4 months after closing, is already outperforming our conservative NOI projections by 19.1%. When we laid out the business plan for Oakwood, we set pro forma rents for renovated units at $1,300 for 1-beds, $1,500 for 2-beds, and $1,700 for 3-bedroom units. On average, for renovated units, we're exceeding these rents by $150. And just last week, we signed up new leases at $1,530 for a 1-bed and $2,100 for a 3-bedroom unit. We attribute this performance to conservative projections, a great management team, and strong market fundamentals. Given Bradenton Reserve's proximity to Oakwood, combined with its value-added potential, we expect to see similar performance and are very excited about this investment opportunity. Warren can tell you more about the submarket.
Thanks, Ryan. So to begin, we're going to start talking about the market because, as Ryan mentioned, we're really excited about this market. Given our experience at the property down the road, we're very familiar with the market in general, but also the submarket. This property is in a fantastic part of the submarket where the outlook is beautiful, amenities and jobs are conveniently located, and the path of progress is really evident. The whole of the Bradenton-Sarasota market is performing strongly at the moment, and the specific location of Bradenton Reserve within the submarket gives us a lot of confidence when forming our business plan. So Bradenton is on the west coast of Florida, about an hour south of Tampa, 30 minutes south of St. Petersburg. You can see Bradenton Reserve on the map here, just on the southwestern side of Bradenton, and Oakwood Apartments not too far to the east. There is a large population in the MSA, more than 800,000 people, and it's really an attractive place to live with beaches, shopping, restaurants, art galleries, and all of the features that you would expect from an affluent, vibrant, lifestyle-focused place to live. Net migration into the state of Florida is significant at the moment. Around 1,000 people a day are moving to the state. And specifically, the net migration into Bradenton and Sarasota is really what is driving this opportunity. The population has grown more than 27% in the last 10 years. As more and more people migrate to the area for work and lifestyle, as more and more snowbirds relocate for the climate, and as more and more retirees move to the area for a better retirement experience. Going forward, the population is expected to grow by 22% in the next 10 years. This population growth is driving income growth, which in turn is driving rental demand and house price growth. The median income in the MSA was $76,700 in 2020, 10% higher than the Florida average. And this figure has grown by 17% in just the last 3 years. If we look at the pocket of the submarket where Bradenton Reserve is located, median incomes are in the range $52,000 to $58,000. Not quite as high as in the affluent suburbs of Sarasota in the south, but what is most important is that these income levels can comfortably support projected rent growth within our business plan. And you can see that there are lots of highlights that we could talk about. The MSA has been named #1 best place to retire in the US, #1 best city to launch a small business, #1 best beach in America with Siesta Key. In fact, Anna Maria Beach, Bradenton Beach, Longboat Key, they are all just a stone throw away. So not only is Florida a big attraction for migration within the US and a huge and vibrant economy, as shown by the stats on the right-hand side of the page, but Bradenton specifically is a major draw for many people in the US when looking for a place to live. Now, this shows Manatee County in the north and Sarasota County in the south. In both counties, we are seeing population growth and strong job growth forecasted into the future. And this is having really positive impacts on rent growth and vacancy levels, which I'll touch on more in a moment. Bradenton has a large workforce, around 380,000 people in the MSA, despite lacking any one major industry. Job diversity is outstanding, and you can see the breakdown of employment here. The three largest industries are trade, transportation and utilities, education and health services, and professional and business services. And this speaks to the economic resilience that we've seen in the area and at Bradenton Reserve specifically throughout COVID, where economic vacancy only had a small impact. And unemployment numbers have remained better than the national average. May 2021 unemployment stood at 4.2%, which is materially lower than the national average of 5.8%. When we look at the job market in the area, recent job growth has come predominantly from existing companies that are growing, and they're attracting migrants to the state due to the attractiveness of the area, as well as the relatively low cost of living compared to other parts of the US like the Northeast. You can see the list of major employers on this slide, which demonstrates the stability of industry in the area, predominantly made up of schools, manufacturing, and healthcare. And some news that just came out in the last few weeks is that Amazon is opening a massive distribution center in Manatee County. Amazingly, the facility, which you can see on the top right of the screen, was erected in a week, and the county has given Amazon rapid response status, which means that they expect the facility to be fully functional in time for the holiday season this year. You can see that the facility is about 13 minutes from the property. Now, we expect this facility to create around 400 jobs, and the ancillary jobs that will be created off the back of Amazon would be expected to be even more. It really speaks to the path of progress and the development of this southwestern side of Manatee County. So earlier, I talked about population growth and income growth, and the fact that this is having a really positive impact on the apartment market. This growth has definitely been driving demand for real estate, which has been outpacing supply. If we just focus on the graph in the middle, on the orange and blue bars, the absorption and the deliveries, we can see that although in the past deliveries outweighed absorption every few years, you can see that in 2020, this trend stopped. If we just look at the numbers on the right-hand side, you can see that in 2020, there were 3 times as many units absorbed as there were delivered. In 2021, there are 50% more units projected to be absorbed than there are delivered. And this is driving vacancy down in the market. The green line represents vacancy in the Bradenton market, the yellow line, the Sarasota market. And you can see this vacancy trend dropping in both. Now, at the moment, funding for new construction has effectively dried up and new deliveries have stopped. Even if funding starts to become more widespread from now on, it's likely that we won't see major new deliveries in the area for at least another 3 to 4 years. So we expect this vacancy trend to continue in the medium term. And the same supply-demand influences are driving rent growth. With increased demand and not enough supply, the same pressure is leading to increased rents, which you can see in the orange bars on this page. And population growth hasn't stopped. As I mentioned, we're expecting more than 20% population growth in the area in the next 10 years. So what we expect to see continuing is that demand will continue to exceed supply, and this will help to reduce vacancies and increase rents going forward. And finally, one other point worth mentioning, which Mark touched on at the beginning, is that we are located right on the doorstep of the IMG Academy, the premium sports academy in the US and a world-renowned feeder school for the Olympics and many top-tier collegiate sports programs. We do have 2 current tenants that are employees of the school, but the real benefit is probably just the aesthetic of the neighborhood. We back onto the IMG private golf club, and again, we are in the path of progress. Just up the street on 34th Street West, IMG is building a new campus. So they are growing and developing and improving the local area further, and that's only going to benefit us. So what does the property look like? It's a good-looking property. We have 166 units, 12 residential buildings, a B-class asset in an A- neighborhood. Average unit size is 779 square feet, which sounds to be on the smaller side, but actually the layouts are very functional, and all of the feedback that the current owners have received from residents is that the floor plans are one of the features that help to make Bradenton Reserve stand out compared to competitors in the market. Importantly, rents are below current market levels and below comps in the market, which Ryan will touch on in a moment. And from an amenity standpoint, it's got all of the amenities that it should have. Resort-style pool, outdoor kitchen, state-of-the-art fitness center, clubhouse with business center, package receiving station, 2 bike parks, and a pet spa. The property is laid out simply and efficiently. So the main entrance is here on the bottom of the screen, which has great frontage onto 34th Street West, with more than 10,000 cars a day driving past. Most of the amenities are centrally located around the clubhouse and pool area in the center. And as I mentioned, attractive unit mix and layouts. It's all 1s and 2 beds. We've seen that demand for 2 bedrooms has been incredibly strong in the submarket, but 1 bedroom demand has been really strong as well. Functional floor plans. Every unit has a washer and dryer. Every unit has fenced in balconies, which is really popular in Florida. And if we look at some photos of the property, you can see the condition is really good with nice finishes, the clubhouse and gym, swimming pool, outdoor kitchen, pet spa, 2 dog parks, the locker facility. This is their current renovated unit. It's got nice built-ins in the living room, which are in all of the units, which is a good differentiating feature. And the kitchen is clean and functional, but still provides us with an opportunity to upgrade. And I will pass it over to Ryan now to talk more about our business plan and what we plan to do at the property. Ryan?
Thank you. The opportunity in our business plan starts with under market rents. After completing our comp survey, we identified that rents at Bradenton Reserve are significantly below that of our competitors. Lower rents at Bradenton Reserve are attributed to the fact that many of the competitors have already completed a value-add renovation program. Perfect example being Coral Club Apartments. This property is located right behind Bradenton Reserve. Both properties have the advantage of being well located near major employers and retail centers. They both share a location of lower crime and robust median income. However, Coral Club, being partially renovated, is proving out rents $300 plus higher than Bradenton Reserve, despite the fact that Bradenton Reserve has better exposure to the main thoroughfare and more desirable floor plans. Additionally, Bradenton Reserve is one of 2 properties in the vicinity setting rents manually and not using daily pricing software. Current ownership's choice to set rents manually, combined with offering rent concessions at the onset of COVID-19, has created an opportunity to pluck some low-hanging fruit. Currently, the property has a loss to lease of $230 per unit. By implementing the use of revenue management software and burn off of concessions with lease trade-outs and renewals, we expect to see leases brought to market rents over the course of 18 months. Additionally, we expect to see a premium on renovated units of $131, which brings rents at Bradenton Reserve into the mid-range of the comp set. There are a few different unit interior scopes currently at Bradenton Reserve, ranging from completely classic untouched units to various levels of partial renovation. After touring units of the surrounding comps, we have proposed an interior scope more consistent with that of the competitors. On average, we plan to spend $6,500 a unit to bring the unit interiors across the property to a uniform scope in line with that of the competition. We plan to add more durable and aesthetically appealing quartz countertops, shaker-style cabinet doors, add microwaves, tile backsplash, new plumbing and lighting fixtures, and a more modern paint scheme. As the property is well amenitized already, with a pool with lounge furniture, screened-in patios, 2 dog parks, a package center, pet spa, clubhouse with business center, fitness center, and a community kitchen, and a great-looking water feature in the center of the community, the only amenity improvements we plan to make are improvements to the outdoor kitchen and adding a covered seating area on the pool deck and near the pond. Exterior work on the property will consist of addressing the limited deferred maintenance. There are some roads on the property that will need to be replaced, a bit of landscape to be done, and repair and restripe of the parking lot. Here are some photos of the various unit scopes currently on the property. As you can see, the classic units leave a lot of room for improvement. And the various levels of previous renovations allow us to save some renovation dollars by taking off where the previous owners left off. To the right is an example of a kitchen renovation we completed down the road at Oakwood, which has seen great success with recent leasing. We plan to execute a similar scope at Bradenton Reserve. Our pre-existing relationship with the brokers on Bradenton Reserve allowed us the advantage of making a preemptive offer, stopping the marketing process before competitive bidding could drive up the price. Our experience bidding on other assets in the market has been extremely competitive, with overwhelming investor demand for product and strong growth markets with great fundamentals fueling multiple rounds of competitive bidding, with most deals trading $2 to $3 million above initial pricing guidance. As you can see by the sales comps, we got a very fair deal on Bradenton Reserve at $182K a door. Additionally, our basis is significantly below replacement cost. As you can see on the right, trades in green represent properties built between 2008 and 2019, trading significantly higher as the cost of new development drives up the sales price. As Warren mentioned earlier, there's a huge lack of supply in the submarket, and with unit absorption projected to continue outpacing supply, developers able to secure financing will continue to build new properties on what little developable land is available. As these properties come up for sale, we'll continue to see increasing sales comps prices, which will increase the comparative value of Bradenton Reserve at disposition. Moving on to our ownership structure, investors will receive an 8% cumulative preferred return. Thereafter, cash flows and proceeds from capital events will be split 70-30, 70% to investors and 30% to the sponsorship team. However, investors receive 100% of net proceeds from refinance. On the right, we have a chart showing sources and uses for the project. We'll secure $25.3 million in senior debt, leaving $8.9 million equity, of which sponsorship will be investing between 5 to 10%. Uses of capital breakdowns as follows: $30.25 million to the purchase price of the property, $1.8 million in capital expenditures and improvements. Closing costs and soft costs total to $1.2 million, $605K acquisition fee, and working capital and contingency fund of $311K.
So for the investment summary, we're looking at an 8.9% average cash on cash return, a equity multiple of 1.98 based on a 5-year hold, and an internal rate of return of 16.3%. There's an 8% preferred return paid to the LPs. The senior debt will consist of a $25.3 million bridge loan with Bridge Investment Group with a rate of 3.49%. The term will be 3 years with 2 one-year extensions, and interest only will be for the full term plus the 2 one-year extensions. Our exit cap is 60 basis points higher than our going-in cap rate and 10 points higher than CoStar's projected cap rate for our year of disposition. Continuing on with the investment summary, we have multiple exit strategies, and from the investor point of view, we have a summary here based on a $100,000 investment. The cash on cash percentage is 5.4 year 1, 8.4% year 2, 10.3% year 3, 10.1% year 4, 10.6% in year 5. And that's total cash flow of $44,711. You see you get your return of capital there, and then the portion of profit at sale results in the 198 equity multiple.
To ensure we're able to provide the best risk-adjusted investment opportunities to you, our investors, we have a few more metrics we like to run sensitivity analysis on. In addition to cap rate, we run sensitivity on organic rent growth and NRI. CoStar has average year-over-year rent growth for the hold period projected at 6.6%. And Yardi Matrix has year-over-year average rent growth at 4.9%. To maintain our conservative standards in our underwriting, we've set average organic rent growth at 3.6%. Using this as a baseline and cross-referencing with the reversion cap rate, we've created these sensitivity tables showing both average annualized return and internal rate of return. We have a worst-case scenario of rapid cap rate expansion combined with below projected rent growth yielding an IRR of 13%, ranging to a best-case scenario of continued cap rate compression and rent growth exceeding our projections, but still below that of CoStar and Yardi, generating an IRR of 19.2%. Looking at average annualized return, we have a range of 13.2% to 21.5%. Another key performance metric we track is net rental income, or NRI. This is the gross revenues from rent collections and will fluctuate with occupancy and loss to lease. The property is currently 99% occupied, in line with the comps, which are also 99% occupied. CoStar's projected market occupancy for the next 5 years of 98.25%. In an effort to stay conservative, we've underwritten stabilized occupancy at 95.5% and occupancy throughout the renovation period at 94%. Fluctuations in NRI will yield year 1 cash flow ranges from 3.1% to 7.8%. When looking at average year-over-year cash flow for the entire hold period, we see a range from 7.6% to 12.5%. Quick review of the investment details. Bradenton Reserve is a 1986 built 166 unit multifamily community well located in Bradenton, Florida, with an average unit size of 779 square feet. Market vacancy is 2.5%, projected to compress to 1.75% and hold there for the next 5 years. And the property and the comps are all 99% occupied. Current aggregate rents in the property are $1,112. We're showing a break-even occupancy of between 60 and 68% with a debt service coverage ratio of 1.57. The fee schedule for this investment is a 2% acquisition fee, a 2% asset management fee, 1% fee at refinance, and 3% third-party management fee.
All right, so we will be sending out an email, just so you know, with this recording. And in there also, we will include a link, which the next slide will show you, but it's a link into the portal. A lot of you are already on there. If you're not, you can register on the portal. It's a pretty simple process because it walks you through the different documents and it's all online and things like that. So you'll review and complete the investment package using the portal. It will then be sent back to us to review. If everything is okay, we actually sign that and you receive an email notification that you've been approved. And then you also will have wiring information where you can wire the funds. And then we'll close the deal. It's a 75% or $75,000 minimum investment. It's open to both accredited and non-accredited investors, and obviously cash and things like that, but also retirement funds. Some people know that. Some people aren't aware that you can invest through your retirement as well, like IRA, SOL 401k, trusts, LLCs, things of that nature. We expect to fill quickly. The last deal we did in Sarasota filled up extremely fast. So a lot of people are probably disappointed they couldn't get on that. So if you do have an interest, it's important to fill out the paperwork quickly. If you have questions, reach out to us and we'll answer those to our best ability. And then we also ask that you don't forward the recording or this presentation to anyone without notifying us first. The next slide, I think, will show you kind of just an image of what it would look like. You actually come in, if you're already registered. You just put your email, password, and then if you're not, you can click the register button, and then you'll see this Bradenton Reserve kind of pop up here, and you view details or invest. Click on invest, and then that's what will walk you through each of the steps. So it's a fairly painless process to execute the documents online. If you get stuck somewhere or have questions, just reach out to us. We're more than happy to try to help you with that as well. I think with that, we'll open it up to questions.
I see a question here. Has the property been flooded or damaged in the past by hurricanes? No, to our knowledge, it has not. Although, like much of Florida, there is some minor flood exposure with 2 buildings being partially located in a designated wetland area. Although the footprint of these buildings do sit in the wetland, the elevation of the structures puts the physical structure outside of the wetlands plane. But to mitigate this risk, we will be carrying flood insurance on these buildings.
Just a quick kind of comment along insurance. I mean, we've been through various insurance claims and things like that. Obviously, nobody wants to go through that process because it can take a while. I mean, it's fairly painful. But we did have a property actually in Texas that flooded. My general statement on it is, yes, while it's a pain, our coverage will typically cover us for lost rents for one, which is great. So that concern can kind of typically be mitigated that way. And then, we've never had a claim of insurance of any kind where we didn't get more than we needed to complete the work. So in every single example, we've had an insurance claim. We've had more than enough money to complete the projects that need to be required for that. The question I think about previous experience, results with investing in and managing the turnaround of apartment complexes. There are quite a few. I'd say if you can, Adam, reach out to us directly on that, but you've done a lot of transactions. So more than happy to kind of talk through that with you as well.
Exterior CapEx. Yes, we're looking at a little under $600,000 in exterior CapEx, most of which is going to repair of roofs.
There's a question I think above that too. Is there hurricane flood insurance required in this area, and what sort of expense is that?
Within the wetlands, it is required, although the elevation certificate of the structure gives us the option to take the coverage or not. We're choosing to take the coverage. Our total insurance expense, including the liability umbrella, the property insurance, and the flood, we're looking at $110,000 a year.
Is there any loan signing fee? No, there's not a loan signing fee. And then there's a question about how do you use your IRA to invest? Able to assist with that? Absolutely. Just reach out to any of whoever your lead is on this. And we can definitely put you in contact with people that can steer you in the right direction with that. It's fairly painless to do it. I've done it personally originally with IRAs, and also have done QRPs and things like that. So it's definitely something you can do, and more than happy to provide some context for you to reach out to on that as well.
As far as the seller's decision to sell, they've just reached the end of their business plan.
Will high inflation rates help or hurt the returns? You probably can ask 2 economists and get 2 different answers on that, frankly. But reality is that I don't think it's a mystery that prices are going up right now for a lot of different things. Just reality, right? So, and rents are going up in this market in particular. Compared to a lot of the markets, continues to go up. So we personally feel, I invest in a lot of different things, not just multifamily. I only sponsor or lead multifamily deals, but I invest in other real estate as well. I personally feel that, no matter what happens, people need a place to live. Trying to predict what's going to happen with, tax changes or inflation and things like that, I think people are wrong more times than they're right. We really believe in the deal. We love the area, the property, and we believe we're being conservative on the underwriting that will help us, kind of weather any storms that may come along. Even during the pandemic, property performed extremely well, where there are a lot of concerns from investors in that area as well, but it still has done very well.
Question about flood risk. Is it in X zone? So as Ryan mentioned, there's a corner of the property that is I think it's A zone, but 90% of the property is in the X flood zone, which means no flood exposure within, I think it's 100-year or 500-year return period.
Any chance of it performing extremely well and refinancing and keeping this property as a long-term hold for investors? I would say I would go into the investment based on what we presented, realizing that, things can change. We've had properties that we have sold in 14 months, which is not common, but we've done it before. We have some properties where we thought we would, sell within a 3, 4, 5-year period, and we put a lot of money into them. Done in one case, we're doing a second refinance in less than 3 years on a property, and we put a bunch of money into it when we got the loan. So that's one that we will probably continue to hold longer. But we're going to always try to do what's best for the investors. In that example, 2 refinances in 3 years, people got their money back within 15 months on that deal. But we weren't planning on doing that quickly. So I would say yes, anything's possible. But I would go into it based on what we're presenting today. And if things go better than that, that's phenomenal and great, but I wouldn't necessarily plan on it happening. 1031 option at the exit. There are ways to do that. Even as an individual investor, we can definitely put you in contact with our attorney as well, how that can take place. So if you do have questions on that, you can reach out to us and I'll definitely steer you in the right direction there.
Parking, we're looking at 2.1 parking to unit ratio. Currently, there's no covered parking on the property. We don't plan to add any at this point. Then what percentage of funding will managing parties providing? Putting in 5 to 10% of the equity.
I don't see any other questions.
There's one more question, Mark. Any 1031 option at the exit?
Right. Yeah, I did mention that. So that's the one that if you do, there are ways to do it, kind of like a drop and swap, they call it, and things like that too. So even as an individual investor, but I would just say it's best to speak to an attorney about that. If you don't have an attorney that's familiar with that, we do have one. We've done a lot of 1031 type transactions and more than happy to point you in his direction if you reach out to us as well.
It's a question about assigned parking. There's currently no reserved parking or assigned parking at this property. We are putting in place reserved parking at Oakwood down the road and charging $35 per month for those reserved spots. So that's definitely an other income opportunity for us at this one.
There's a question too that came above that. When are investors completely out of a deal? It's when we're out of the deal. So we're all collectively, we go out when the property sells. So even if we did a refinance to the question that came up earlier, let's say we gave you back all your money and a bunch of extra money, just hypothetical, you're still in the deal. You don't get out of the deal just because of that. So you continue to stay into it till it's sold.
Historical collections on the property, even through COVID, they were very solid. I think the current owner, like many owners, had a bit of an overreaction at the onset of COVID and offered a lot of concessions that they probably didn't need to. But going back 3 years through our due diligence on the financials, we didn't see any time that the bad debt really spiked above 2.3%.
I think those are all the questions. You can definitely still reach out to us afterwards if you do have questions after we conclude here. If you do have an interest, the email should be going out tomorrow on how to proceed with the next steps. If you want to fill out the paperwork or have questions, just try to do that. If you have an interest, kind of quick as possible. Again, I mentioned, our last deal that was in this, closest submarket filled up within like 2 days. So it was very, very quick process to get funded. So again, appreciate everyone's time though. And we'll talk to you all soon.
Thank you.
Before we completely wrap up here, I'd like to offer some quick instruction on the portal on how you log in, how you subscribe, and then eventually fund the deal. Once you get to the portal, you're going to get a name and password, log in. Baby's crying, he's okay, don't worry about him. click on invest up there on the left, and then click on invest there to express how much you would like to invest. First thing you have to do is click that I confirm that I've received all the documents. Click next, and now you want to add your profile. Are you going to invest as an IRA, LLC, individual? Put all your name, your address. You're going to select down the bottom there what method, so ACH is what I suggest. Now you have your profile. Select that profile and put in your amount. Put in 100,000 here. Select next. That's because I did that before, and ignore that. Now you can subscribe to the deal if you wish, if you're ready. When you're ready, you can always download these. This will take you to where you can do this electronically, which is very convenient. You can read through all the documents. The blue button up there on the right will take you to the next place. It's basically like a DocuSign, take you to all the places that you have to sign. And, fill out all the information. And then when you're ready, you can view the wiring instructions once you're completed there and you've submitted those. This will probably say next. You'll click on that, and there are your wiring instructions, and then you can print those out when you're ready. Okay, hope that helps.